Welcome to Street Smarts. I'm Steve Guilfoyle.
And I'm Olivia Vosnenko. Just because markets are rocky today doesn't mean you have to peace out. Let's piece it together instead, huh?
Well, I'll tell you, Olivia, it's the market situation right now, the economic situation, it's so complex right now, and there's so many factors that I basically had to put this mess together, lay it out so I could look at it all at one time, and try to explain it to our home gaming public, because this is really, I almost have to just picture everything one at a time just to get my own head around it. And I have not only the fans of Market Recon and of Street Smarts emailing, but I actually have some professionals emailing me. So I know this is common, that a lot of people are confused or at least intimidated by the situation.
All right, so let's make some home runs for the home gamers and us. Tech, you said, was a home run. Now, what is going on? What a hot topic, by the way.
Oh, yeah. I mean, everybody knows I've been hot on tech.
All right,
I mean, the demand is there. There's no doubt about it. All right, big data, the data center, artificial intelligence, machine learning, autonomous driving, voice. These are all things or industry directions that require increased demand for chips, basically,
Yeah.
for DRAM, for NAND. I mean, do you realize how many chips are required in just one of those little voice boxes, those home assistants such as Alexa that Amazon produces?
How many, Stephen?
30, all right, 30 of those. Now, just picture now an autonomous vehicle, a self-driving car. I don't think this is a cyclical business anymore. I think that the demand really is there. Mm-hmm. And as you can tell by almost a parabolic move of the entire group over the past, I don't know, several weeks, coming out of that February flash correction, that if we had not had this recent hiccup here inspired by this whole Chinese situation, that we probably were off to the races. But now we have to rethink almost everything.
Yeah, okay, so the Chinese situation. There's two forces, right? We got CFI US, and then we got tariffs, right?
Okay, so the president championed Qualcomm. All right, he said these guys are important to national security. I don't want a company such as Broadcom, which has close ties to a big Chinese concern such as Huawei. I don't even know if I'm pronouncing it correctly, Huawei or something like that. But what these guys are is gigantic, all right? And that firm was started by an officer in the Chinese military. They refer to themselves as a collective. So it is a legitimate concern of the president. It wasn't a strike against free market capitalism. It's a legitimate concern that we have to deal with. Right. So does that reduce the value of the space? Does that remove the potential for takeovers being priced into the marketplace? Or maybe we have to price them out of the marketplace now, because there's no longer, you're going to have to almost discount firms that have close Chinese ties, which is a ton of firms in the tech space. I'm long a bunch of them, as a matter of fact.
I know, let's talk about that.
So let's go to, you know what, I want to show this to the people. I don't know if I can show it to them, but the S&P 500 companies with the highest exposure to China. All right. Now, Broadcom is number 4. Qualcomm is number 2.
Which you are long?
I am long Micron. On this list of top 25, I am long Micron, Intel, Apple, AMAT, which is Applied Materials, and NVIDIA. But at least those are towards the bottom half of the
I'm pulling up Micron right
25.
now. Yeah, okay. Mm-hmm.
All right. Now, these largely chip firms, they could run into a little bit of a problem, but at least, and let's take NVIDIA for instance, this is a firm that gets, I'd say, more than half of their revenue from gaming. But they're also very big in autonomous driving. They have an interest in crypto mining. I mean, this is probably the cutting edge firm in the space as far as I'm concerned, which is why it's the one that's priced to a higher valuation. Most of this semiconductor space is priced around 12, 13 times earnings, actually below the market norm. But NVIDIA is a little bit above that. But fortunately for NVIDIA, only about 19% of their revenue is tied to China in some way.
You talk about gaming. Is that because you're a Call of Duty guy? Because he's a military guy?
I am a military guy, but I'm not really a video game guy. But
he really gets it.
But I am smart enough to recognize when a business is viable and money can be made. And I know that the Overwatch League, as far as the other esports leagues, which is why I also have a stake in Activision, is really someplace where I think the profits will be made going forward. It's a growing industry.
All right, I pulled up MU's chart. Now, you're saying that you would recommend buying up at this point?
I have a long position in Micron. I think right here.
Where were you long, Stephen, can I ask?
Oh, a good bit lower. I'm up about, what's the last sale?
Where are they?
probably in the high 50s somewhere, 58,
Okay.
59, something like that.
Cool.
All right, so I probably got about 20% in the name.
The Mac Daddy, the MACD is very high
Yeah,
up.
it's gone a little bit parabolic.
Straight.
There are reasons to worry a little bit here.
Yeah.
Short term, but I think long term, I mean, the potential for a takeover is also there as well. Now, they receive almost 50% or more than 50% of the revenue from China. So there is an issue there. And I don't know anything about a takeover regarding Micron, but I do know that the move has been a little more parabolic than the rest. Now, that could be because of DRAM, the demand for DRAM, DRAM. But I think that a company such as Intel, that I also own, we know they made overtures or took a look at Broadcom. I don't think anybody in their right mind would take that route right now. I think you might want to step back. Now, Intel is going in a lot of fine directions themselves, but it might be something they took a look at going forward. I'm not telling them to do that. I'm not telling the home gamers that this is going to happen, but it's something I thought in the back of my head.
Well, we're putting the pieces together, and chips are certainly little pieces.
Right.
So let's go to the next one.
Let's stick with tech just for 1 second.
Okay, all
for the
right,
folks
all
at
right,
home
all
who don't know better, all right? A lot of the big cloud names don't have a lot to do with China whatsoever. So if you're a little intimidated by the Chinese impact, all right, VMware, Salesforce, Adobe, Red Hat, all minimal to no Chinese exposure. Internet stocks such as Amazon and Google have either been kicked out or left China on their own, so they don't have exposure either. You'll notice.
Yeah, that's true.
Right, I'm long Amazon too. I probably should disclose that, and Salesforce. But those stocks, I think Amazon last we looked, Amazon was up $12. Google was up, Alphabet was up $19 or so. That's because they have no exposure. They're not there.
Yeah.
They're not part of the game. So that's where a lot of investors ran this morning when the whole market went the other way.
Nice homework.
Yeah, okay.
All for you guys, all for you. So, Stephen, we got to move on because there's so much information. I tried to make a cute little segue with all the pieces. Let's move on, even though this is not little, the macro.
Oh my goodness. The macro and...
Maybe what was little is the bid to cover on the recent Treasury auction.
Yeah, they've been a little below, but you know what? I'm kind of okay with the foreign participation on the 10-year, okay? We Treasury auctioned off $62 billion worth of 3-year, 10-year, and 30-year notes and bonds over the first 2 days of the week. We had 66% participation from indirect bidders, which is foreign accounts, mostly foreign central banks, which means that they're not being scared away just yet. Right? We had 57% participation from that ilk on the 30-year. Demand for the 30-year was actually pretty good in my opinion compared to the shorter duration. The 3-year was a little sloppy. I would grade these auctions as C's. They're not overly hot, not overly cold, maybe a little bit better than expected.
Well, everyone's worried about the oversupply, but obviously there's always going to be demand for U.S.
And they're
paper,
buying
right?
treasuries today, I mean, with a little bit of a flight to safety. Which leads us to macro, because treasuries and macro are forever tied, all right?
We have a lot of macro this week.
Oh my gosh. I mean, and we've been disappointed largely. I mean, job creation was awesome last Friday. We saw that. Wage improvement, wage growth really wasn't there to the extent that maybe a lot of people had thought. And that was backed up by the CPI.
But wasn't that a good thing? I thought that the lack of wage growth was favored in this read.
No.
They said it was a Goldilocks read because lack of wage growth, more job creation.
Well, we had gone over this prior, that the 2.9% wage growth that we thought we saw in January, it was revised down to 2.8.
Yeah.
That was I thought it was a false flag, that it was a little hotter than it probably should have been, and it was. I think everyone in the world wants to see wage growth, and subsequently CPI, an increase in consumer level inflation, so that the country can keep growing and grow out of its debt situation. We saw from Atlanta today that they were downgrading their GDP forecast based on the PCE on personal consumption.
Now, come on, Atlanta GDP, come on. They've been wrong before.
They've been wrong often, but it's not
often.
They are, they're often wrong as much as the Fed has been wrong about everything over the last 10, 12 years. I mean,
that's a good point.
Let's face it, this isn't a group that gets out there and kicks tail. But 1.9% is not encouraging. Earlier in the quarter, we were probably looking, we were singing the praises of Atlanta Fed GDP Now forecast that was up above 4%.
I know.
Now we're in a little bit of a hole, and it's not being helped by retail sales. Retail sales disappointed greatly, both at the headline and at the core.
I know.
CPI just barely on consensus. There were whispers it might come in hot. Not to be. Now we're counting on industrial production and the surveys out of New York and Philadelphia to kind of save the day macro-wise.
That's what I'm saying. Is manufacturing going to start picking up in this space?
Well, manufacturing employment has been strong. Manufacturing surveys have all been strong. I think you are seeing the beginnings of inventory building and the like. Business inventories were actually pretty decent, although that was a January number. So I do think...
Which portends sales will be higher, right?
But then you want to go back to the treasuries, where we've seen strength in treasuries. There's the yield between the 2 and the 10 years down to something like 55 basis points.
And you want to see it?
A lot. As a guy who used to specialize in the banks, I would like to see that spread run up to 80 basis points. I mean, I'll settle for 60 and a hold it at 60. Don't let it go below. But I would love to see 80 and 80 plus as far as that spread goes. But
so we have Philly on board and Empire State on board tomorrow.
That's tomorrow.
Philly is the most important.
Philly's the most important
they've been
survey outside of the ISMs in the country.
And they've been the strongest in the
They've been red
regions.
hot. And we look for more of that tomorrow. Industrial production, you want to see a pop-up in capacity utilization, which comes out at the same time. And you want to see a return to month-over-month positivity in the headline industrial production number, which it was negative last month.
We're all about the MOM.
That'll at least stabilize the macro picture and maybe increase the odds of that fourth rate hike in December.
Because we're definitely going to get one in March.
We're going to get one in March. Right now the odds are maybe 86, 88%, but December is down to 30% probabilities from where it was, which was 36%.
Yeah, well, I always say that the fourth rate hike is like the 19th hole in golf. It's like we're going to see if that's if that's really going to happen. That's a real
I'll tell
thing.
you what, if GDP comes in at 1.9% annualized for the quarter, we're not going to see more rate hikes. That would be suicide.
All right. Well, okay, Stephen.
Yes.
Is it getting hot in here? Is
it's
it time? Is it time for some? It's time for
Market Rush.
Now I had a special request for Market Rush, and that was energy. And Stephen, he went with it.
Well, I love talking about the spaces where I'm feeling some pain. We did go into tech, which has been easily my best sector of the year. So we'll go into energy, which is what I'm doing in energy. I recently have executed a lot of trades in the space because I'm reorganizing my exposure to energy. All right, I'm not abandoning it. I'm reorganizing it. I want to focus on servicing the rising U.S. production rate, which seems to only be going through the roof. Yeah. I want to get out of or reduce my exposure to exploration, to drilling, and to natural gas because, thankfully, to my long position in Apache, I ended up long natural gas, which I really didn't foresee that percentage of nat gas being in the mix, but that's where the Alpine high is right now. So what I've done in this space is I took a profit in Schlumberger. Not on the whole thing, on about 30%. I got out of some more of my Apache because I was down to about 60% of my original long. I took that down to 40%. I got out of almost half of my Exxon. I funded those losses through taking a profit in the Schlumberger, which is all right. That's a service firm. I want to be in oil services. That's fine. I have a small position in Halliburton. I like Halliburton around $45. All right, I only got a little bit there when it traded there briefly, I guess a couple weeks ago. What I've done to help myself increase my exposure to Halliburton, because Halliburton is a much more domestic oil services play than Schlumberger. Schlumberger is only about 27% domestic. Halliburton is much more so. But what I've done is I have shorted Halliburton $45 puts that expire on April 20th.
Okay, so you shorted puts.
Right, I wrote puts basically.
You wrote puts,
right.
Okay.
This way, if it comes back to 45, by the time that my puts expire on April 20th, or if it runs through, I will own the shares at a price I like, minus the premium I took in. So we're probably talking about 40, I forget where I sold them exactly, but somewhere in the 44.30s is probably where my net basis would be on that trade. Mm-hmm. And if it does run through, then I would probably also write 42s and 40s so that I could scale in a little bit, all the while writing those options. This way, if it goes the other way, if it runs the other way, I pay for lunch. I make a little money there.
Nice, exactly.
Right. Now, my rule there is if I want to buy a stock at a price and I get what I want, I get my full position, then it's an investment. If I just get a little bit like I have with Halliburton right now, I didn't get my fair share and it runs on me, well, then it's a trade.
All right, cool.
That's how I justify it.
I like that definition.
Right, and I've done the same thing with Apache. Even though I don't want to own more Apache, I really don't. But I wanted to drag in a little revenue because taking a loss on a stock that I really felt I was trading well for most of 2017 really kind of sticks in my craw a little bit. So what I've done is I sold the 32.5s that also expire on April 20th to bring in a little revenue in the Apache and soften that blow a little bit.
All right, Stephen. Well, now that you've covered market rush in energy, let's move on to Kudlow and Pompeo, which sounds like a vacation to me, because this might be good for energy, right? If we start with Pompeo.
Well, we'll start with Mike Pompeo. Yeah, He's obviously going to be a hardliner on trade. He's a militant guy. That's what we believe anyway. I don't know the man. He went to West Point. He seems a little bit tougher than his predecessor in those terms. And he's no friend of Iran. And it seems like no friend of Venezuela. And these are both OPEC nations. They're producers. Mm-hmm. And if he advises the president to not renew the waiver for Iran, as opposed to bringing their sanctions back, that's going to dry up supply a little bit in the energy space.
And then from the bottom of my heart, can you please tell me this? I'm conflicted. What is Kudlow going to do that's different?
Well, different than Gary Cohn.
Well, I mean, why is this a better choice for Trump? He obviously has voiced concerns on Trump's policies. What's different? Well,
he's a globalist, as was Gary Cohn. I don't think there's that much of a difference in how they think about the world. And I think the president was very happy with Gary Cohn for the most part.
Yeah.
All right.
That's what I'm saying.
But I think that Kudlow is more of a Trump loyalist, to the point where he was one of the first high-profile people that actually endorsed Trump for president when he first announced he was going to run. Mm-hmm. I think that Larry Kudlow is one of the few economists that might actually bring the infrastructure bill back to the fore, even in this fiscal situation. That'll be good for the transports, good for a lot of types of industrial type names. I think it becomes very interesting. I mean, the man is he's a real economist. He was an economist for Bear Stearns. He's real world. He worked in the Reagan administration.
Yes, a Reaganite.
I've met him several times. I think he's one of the nicest people I've ever spoken to offset. Even when you're a nobody, he'll take the time to tell you what he's thinking, and he'll care what you're thinking. So I like him a lot. I know him a little. I don't know Pompeo. In both cases, I think the president is rewarding loyalty with loyalty.
And he's a great TV guy, so he could be a big market mover.
Well,
yeah?
that probably plays a lot into the president's decision.
Course.
That's a great point, Olivia.
Yeah, thank you.
Larry Kudlow obviously is very comfortable in front of a camera. He doesn't mind going into detail and explaining something complex to the American people, which is precisely what Donald Trump likes.
All right, awesome. Well, you know what? I think that about wraps up Street Smarts. What do you think about that?
I think we're done for this week.
All right, guys, we will see you on Tuesday, right? Because today's Wednesday.
You bet.
We will be on Tuesday.
Only 6 days to go.
Thanks for tuning in, guys. Have a good afternoon.